Hello and welcome to NDTV Profit. You're watching IPO Adda, and my guest today is from Premier Energies Limited. It's a manufacturer of solar cells and modules, and it's coming out with an IPO which opens on August 27th, closes on 29th. The price is between 427 to 450 rupees per share. Fresh issue of 1291 crores and OFS of 1539 crores. So the total IPO size is roughly around 2,830 odd crores. That gives the company a valuation of over 20,000 crores at the upper end of the price band. And joining me today is Mr. Chiranjeev Singh Saluja, who is the managing director of the company, and Adapa Srinivas, who is the chief growth officer of the company. Gentlemen, thank you very much for joining us on NDTV Profit. My first question to you, Mr. Saluja, I know you're raising 1,290 odd crores in fresh issue. How are you going to use this proceeds? And give us a small brief about what the business model is as well.
Yeah, thank you. So we as a company, we are a 29-year-old company. We are into manufacturing of solar cells and modules. Today, we are a 2 gigawatt operational capacity of solar cells and around 4 gigawatt of module manufacturing. The 1,291 crores of the raise which we are doing, which is the primary in the IPO, around 1,000 crores out of this will be going into our expansion plans. We plan to set up a 4 gigawatt solar cell and module manufacturing facility of the latest technology, that is the TOPCon technology. This facility will be coming up in Hyderabad, about 45 minutes from Hyderabad airport. And this is going to be the state-of-art cell and module manufacturing and integrated facility as what we have today. And on the OFS, as we discussed, the OFS is mostly being done, around 80% of the OFS is being done by a private equity player, which invested in us, called GEF Capital. So they had come in 2021, and they will be partially doing an exit in this OFS.
Give me a sense of the kind of growth opportunity that you see in this segment, because we have of late seen a huge pickup in solar generation which is happening, and your company is directly related to the construction and of these solar farms which are there. Give us a sense of the kind of opportunity that you see, given the fact that you still have challenges with respect to imported solar cells and modules coming in into the country.
So as I told you, we have been in this business for 29 years. Post-COVID, we have seen a great growth story building up in the solar manufacturing sector in India. Not only in India, across the world, post-COVID, everybody started thinking about, a China plus one strategy. India started the Atmanirbhar and Make in India. US has got its Inflation Reduction Act, where they're talking about Make in America. So the manufacturing story is now here to stay. It's growing at a fantastic speed, looking at the robust demand. We don't see any challenge from China. The import of cells from China are not a big issue today, because Indian solar story is a little different, where Indian government has two kinds of markets. One is where there is a very robust pipeline, which the government of India has set up for local manufacturers, and this market is totally protected for local manufacturers to grow the local manufacturing story. And then there is also another market, which is the developer market, where large power plants are being set up, where you can get solar cells from China, and cheaper the cells from China is a big advantage to the developers and to us as manufacturers to make modules for them at most effective cost. And how this helps is that while we are deploying as much solar as we can in India, because it's today the cheapest source of energy, we are also parallelly growing our manufacturing story. And it will not be far that we will be totally Atmanirbhar. Today we have got solar module and cell manufacturers in India like us. We do intend to get into wafer manufacturing and ingot manufacturing. In the PLI story which the government of India came up with, there is also polysilicon which is coming up. So I think this is something which is going to really develop very well, keeping in mind the robust demand. I will leave it to Srini to talk a little bit about the US market because
Yeah.
he handles the market there. Srini.
Sure. So I think to your question, right, just a couple of points and then we'll deep dive a little bit into US market as an opportunity. Chiranjeev touched upon the manufacturing incentives and how manufacturing is picking up momentum overall. But even if you dial back and look at the overall macros and offtake on just energy consumption, right? If you look at India, if you look at US, these countries are just amongst the top 3 solar installers across the world, right? If you just look at the quantum of installations that are coming year on year. And to add further to that, the governments are creating a certain incentive pull, right? In the US, you have something called as an IRA. India, Chiranjeev already spoke about. Recently, we also got the PM Surya Ghar Yojana that is really, kicked off the whole rooftop domestic consumption opportunity as well. So for us, we believe, I think the strength, which is what our conviction and strategy is, company like ours, which are backward integrated, who make their own cells that go into modules. And we're going to come up with wafers very soon to make our own wafers in a partnership with another company, right? I think companies like ours, which have got stronger backward integration, have a better cost control, better quality control, and are in a good shape to leverage this macro momentum and growth in the offtake, right? So this is just my little 2 bits to add to Chiranjeev's point on overall macros and growth. Specific to US market, we took our best strength, which is, cell manufacturing as our core ability as an offering into the US, right? US, again, like I said, is amongst the top 3 markets in terms of solar installations. Year on year, the current run rate is about 40 gigawatts of module capacity is being added to the US. But on the flip side of it, there is not enough cell manufacturing in the US currently available locally, right? So that's the opportunity we saw. And today, after a few years of operations in the US, we are the leading cell supplier from India to the US. Almost close to 99% of cells that are exported from India to US are from Premier Energies. So that's a clear strategic gap, and that's a growth opportunity for us. In fact, we want to double down on this opportunity with a local cell manufacturing plant in the US. We are doing a joint venture with a US company. This company is called Helion. They are true blue US brand that manufactures modules in the US, right? So they make high quality modules which are used by developers and other customers in the US. And the cell that goes in there is Premier Energy. So we've tied up for a local plant in the US with them for cell, which is a joint venture. So yeah, back to you in terms of our growth focus and where US also fits in our strategic plans.
Give me a sense of your financials, because when I've been looking at your financials, FY24, 3,143 crores on the top line. Q1 was around 1,657 crores. I am assuming that, the mega push which was happening and the order flow that came in, it was because of that. But is this Q1 revenue run rate, sustainable going into FY25, 26?
So the revenue increase has been because capacity is increased. So if you look at our revenue over the last 2-3 years, we have been adding capacity. We added almost 1.25 gigawatt of cell manufacturing and about 1.6 gigawatt of module manufacturing in between October 23 to December 23. So as capacity doubled, we are seeing a growth in the revenues, because capacities are now commissioned and stabilized. Going forward, we are growing our cell manufacturing from 2 gigawatt, what we are today. We will be adding another 1 gigawatt of cell manufacturing in December this year, and another 4 gigawatt, which is coming from the IPO proceeds by FY27. So we will reach 7 gigawatt of cell manufacturing. And module, we are already at 4. We are adding another 4 from the IPO proceeds, which will take us to 8 gigawatts. So on capacity side, we will be almost, quadrupling our cell manufacturing and doubling our module manufacturing. And looking at the demand, we see stable operations of this line.
That's interesting, because you had roughly 22% of EBITDA margin in Q1. Is that going to be the baseline as we look forward to the current and next few years?
So pardon me, I would like to refrain from answering any questions on
But
future.
is that
you know,
the
but then looking at the lines which are,
you know, that's what I'm saying.
sorry.
I'm saying that is that going to be the baseline to look at?
So I think this is very market dependent. We would continue to add value to our investors. We would continue to work, with operational efficiencies coming up, with scale coming up, the technology which we are investing in. We would continue to add as much value as we can to our shareholders.
Srinivas, one of the biggest thing which you have in this is the working capital requirement. How are you managing that requirement? Because going forward, as you double the capacity or quadruple the capacity, as Chiranjeev was talking about, your net working capital requirement will also grow in proportion. So how do you look at managing your net working capital requirement, and is the business generating enough cash flows to manage that?
Yeah, it does. So before I pass it to Chiranjeev for a more nuanced answer, but if you see how the commercial terms are constructed, we have very clear commercial terms from order to order, wherein we build in a certain component of advance for the manufacturing and raw materials before the production actually starts. So from a working capital perspective, there is the certain benchmark in the industry that we follow on very fixed commercial terms. I mean, Chiranjeev, maybe you can.
I could elaborate more on this. So today, our net working capital is about 60 days. We don't see any challenge in arranging working capital as we grow. Most of our working capital requirements are non-fund based. And we don't see any challenge. We have got excellent relationship with our bankers. On the long-term lending side, we have a relationship with the IREDA, which is Indian Renewable Energy Development Agency. We have been borrowers with IREDA for 25 years now, and IREDA is very supportive, for all our expansion plans. And we work with some wonderful banks in India, and there is great support from them. We don't see any challenges in working capital requirements.
Chiranjeev, I've been looking at your customer base as well. It's too much of concentration which is there. Largest customer was around 10.6% in FY24, but in Q1 it became 31%. Top 5 was 43%, it became 65%. Can you give us a color on who are your customers and what kind of exposures that you have?
Sure. I can answer this question. What happens in India is that we cater to different pockets of demand which come in. We work with independent power producers who set up power plants in India. Then we work with a host of module manufacturers whom we supply solar cells to, and then we also supply to PSUs like NTPC, wherein they are setting up power plants for themselves. Now this focus on or the percentage on top 2 or top 5 customers, this keeps changing based on the project timelines and deliverables of each customer. Whenever a customer orders modules to us for their projects, they would need the modules in the last 3 to 4 months when their project needs to be commissioned. So this is the dynamics of this industry, that these are project specific orders which we get, and this is constituting almost about 50-60% of our revenue. And then there are customers who buy cells from us, which is of course a very stable month-on-month supply agreements which we have with them.
Can you give us a sense of who this largest customer is, which has 31% of your revenue?
So we had won a large order from NTPC in October last year. So that was an order of 1,700 crores, which we are executing. In the solar cell supply side, one of our largest customers is Tata's. We supply cells to Tata Power, and then of course to the US. We also export cells, as Srini told you. About 99% of cells which got exported to the US from India were from our plant, which talks of the high technology and high efficiency of solar cells we make. US market is only about 20% of our annual revenue, so India market is the focus. We continue to cater to India market and work on government-sponsored programs to push for supplies for projects which are being built in India.
Also, give me a sense of your facilities, because I was looking at your 5 facilities. I think you have decommissioned the first facility, and the other four are gone commercial. In this business, we see a tech turnaround, or what you call, tech become obsolete every 2 to 3 years. Will that mean that you will have to go on a constant capital expansion spree or change your technology spree to cater to the changing technology and the kind of yield that comes out of solar cells and modules?
Yeah, that's a great question, and I'd love to answer this question. We have been in this industry for 29 years, so we have seen all the technology cycles. We do agree with you that there is a tech upgrade which comes into this business not in 3 years but every 5 years. We did shut down our module manufacturing line, which we built in 2017, because that technology is phased out now. That was the polycrystalline technology. Now the industry is moving towards TOPCon technology from mono-PERC. What this means is higher efficiency cells. What is good about the present situation is you can always upgrade cell lines and module lines when you move from mono-PERC to TOPCon, and then TOPCon to the future technology which people are talking about, like TOPCon zero bus bar or TOPCon back contact. There is an upgrade cost, and this is factored in all our business plans. And yes, but this is the nuance in this industry, but then we are all working to make the highest efficiency of solar cells, which would mean more deployment of solar in the world.
Give me also a sense of the cost of raw material, because in the last 1 year we have seen solar cells, whether polysilicon or wafers, the prices have crashed in the last 12 to 18 months. And because you do supply to some of the large customers, you have to take big inventories in place. How do you manage that inventory cost and the losses, because the prices of these cells and modules and the polysilicon or wafers are coming down, and by the time you deliver them to the customers, there is a differential which is there?
Yeah, I must say I'm impressed with this question too. This is something which the solar industry learned over several years, that the dynamics in this industry, we are dependent on one supply source, and the prices are volatile, and hence the industry has matured over the last few years, and we have seen the peers in our industry and companies like ourselves, all the contracts which we sign with our customers are on price variable terms, which means that any volatility is passed on to the customer. The customers also have understood this whole supply chain challenges which this industry has, and that prices could be volatile. So I think everybody in this whole supply chain, the customers, the large developers, the manufacturers, have all understood this scenario, and most of the contracts have a price variability clause which is passed on.
And in case of the cost coming down, do you pass on the cost also, because you are paying them in advance, right? So that cost,
yes,
inventory
yes.
Losses are passed on as well to the customer?
So it's not based on inventory, it's based on the notice to proceed, what we get from our customers. So let's say a customer has given us a notice to proceed to start manufacturing, then whatever inventory which has come in is at that price, and that is passed on to the customer. And let's say there is something which has not been procured, then it's both ways. We are very ethical and very transparent with our customers. If there's a reduction in the raw material prices, this is also passed on to them.
As a manufacturer of cell and modules, one of the biggest challenges that you have is the kind of projects that are going to come in this space. And Srini, you can also come in here, because US is also a big market there. The cost of production of per kilowatt hour is reducing for solar. It's 2.3 to 2.6, which is there, as compared to thermal, where it has gone up almost doubled in the last few years. As more solar plants come in, as more facilities and manufacturing come in, is there a risk of impact of margin contraction in this business for you?
So, you taking this question?
Yeah, you want to?
Yeah, okay. You know, we feel that the demand is so robust that, of course, there could be margin contraction, but it is not going to be significant because the demand is very significant. The green hydrogen story, or if you look at the robust demand, the Indian manufacturing story as a whole, and the way India is growing in terms of GDP. So we feel that solar being the cheapest source of energy today, and the efficiencies and the operational efficiencies which we are going to continue to achieve, and now people are talking about solar wind and solar battery storage. So I think we don't see any significant downside on this.
I think if I might add, I think the price versus adoption, I think we're seeing a bit of an inflection point, right? Where the price has hit a certain sweet spot and the penetration is still in very early stages, right? So I think the price, aided by the more number of manufacturers coming in, aided by the government stops that we're seeing across the world, I think they're all hitting an inflection point for solar to really take off. So yes, there is that bit of price settling down to a more acceptable, more affordable level, but the volume, I think we believe should kind of balance it out as it plays out.
My last one or two questions to you, Chiranjeev. You spoke about the fact that there's a PLI for wafers, polysilicon, and others. What role are you playing there? And if you are getting the incentives, by when do you get those incentives into your P&L?
So we had not participated in the PLI bid because we had set up our facilities prior to that, and there is an incentive which we did get from MIT, which is called the SPEC scheme, which was earlier called the MSIP scheme. So you cannot actually avail two subsidies from the central government. So since we had already availed that subsidy, we had not participated in the PLI scheme. And the new expansion which we are doing, we have again, we are getting incentives from the state government and certain incentives from the central government which are non-PLI, and we have factored in those in our business plans.
Srini, you spoke about getting into a joint venture for manufacturing of modules in the US, where you're going to supply solar cells from India. Can you give us a sense of how much investments are you going to do in that market?
So we actually spoke about manufacturing cells in the US, right, to supply to a module manufacturer out there. So the capex really would be part of the overall business plan that we will build as we go ahead in the US. We currently not really looking at raising the capex for that US plant at this point in time. Our capex, like Chiranjeev started the call with, is solely based on the 4 gigawatt TOPCon cell line and 4 gigawatt TOPCon module line in India. So cell line again in the US again is subject to the state and subject to some of the other terms that we will come to as far as US is concerned.
And when do you expect that to come through?
There, we have a JV there with the US.
So like we said, so it's a JV that we've tied up with a US module manufacturer. So we're looking at least next 2 years for that to hit the ground up and running. There's a lot of work happening on the ground in the US, and that's where our whole JV comes into play, right? We bring in the cell technology and operational expertise, and our partner there brings in the local ground knowledge because they've been running factories in the US for last 2 decades. So, the ground connections, utility connections, and, just the management of the team, etc. That's the expertise they get to the table. So that's the whole plot for the US plant.
Gentlemen, it was a pleasure talking to you today. Your IPO is opening on August 27th, 427 to 450 rupees per share. It's a total IPO size of 2,830 crores, and that values the company at a little over 20,284 crores. Thank you for joining us today on NDTV Profit.